Right. So I'm going to start with Boom 500. It's presenting a very, very beautiful, beautiful swing buy. Actually, it's a swing buying opportunity that I've been waiting for a while now. So when you see me now coming now to show you or to do a video like this, it's on the zone now. It's on the zone now. So let me just do a quick rundown analysis of why I'm saying that and where I'm anticipating to enter, or how far I'm anticipating to hold, so that you also can expect also the same thing. Right. So Boom 500, it's a very, very interesting pair that has been paying us for a very, very long time now. So we don't trade spikes or ticks. We just trade the market. If it's going up, we are buying. If it's going down, we are selling. We don't have this concept of saying ticks, spikes. No, that's for amateurs, people who are still finding their way in trading. Right. So Boom 500, if you go to the weekly, you will discover that it's either this trading view dot derive. Who is this now? It doesn't offer the weekly time frame. So if you go to the weekly, if you all go to your MT5 on your weekly time frame, you'll discover that there the market didn't break there. If you all go to the weekly, you discover that the market didn't break there. It didn't break there. It didn't break that high there, which was a previous swing lower high, right? That was a previous swing lower high like this. So this was my lower low. So on the weekly, they didn't break there. They didn't break there. You discover that was simply a liquidity sweep according to the weekly. So it being a liquidity sweep like that, it means now the probability of the market is still in a bearish order flow market externally. So now you discover that internally they've done something that they haven't done. As they were going up here, you see that they were forming high highs, high lows, high highs, high lows, and they were never breaking this. They were never breaking this up until here, where the market started to turn from the top there. Where they started to turn there, that's where we had our first major change of character there. Right. So that first major change of character now, that's presenting, if you notice, so from here to the top here, the major movement or the major momentum was to the bullish side of things. The major momentum of Boom 500 was to the buying side of things. So that's where you were supposed to be taking your trades. You're supposed to be taking your trades from on the buying side of things. Focus on where the momentum is going. That's where you'll find most of your. So now here they've established something they were failing to establish all this while. Meaning, I'm anticipating a very, very serious movement to the downside. So that change of character, they have to come back, pull back into that untapped supply before continuing to drop. So right now, I'm anticipating swing buys. Then once we get to the top, we swing sell. So swing selling, once we start to swing sell coming down, our TP is coming down will be, the first TP will be this one, this leg that will go up, this leg that will start to go up, that will be our first major target. Then these other levels will be minor targets along the way. Those will be just minor targets that you can also use for taking profits when you are now coming down, right? So that's my high time frame bias on Boom 500. So now, why am I anticipating the pullback that we are anticipating, which is the pullback into this untapped supply there before we continue selling down? So there, we're actually anticipating major swing sales from there. Major swing sales. I'm actually anticipating major swing sales from that supply there all the way to the downside, like this, right? So, but now for the current moment, it means I'm anticipating swing buys to the upside, right? So now we now need to identify now the proper entry now for our buys. We now need to identify the proper entry for our buys. We don't just enter just because we're anticipating the pullback. No, we don't just enter because we're anticipating the pullback. No, now we now need confirmations of entry. Right now, we are at a very, very strong demand zone. This demand, why am I anticipating that one to be a high probability demand where we can now get that pullback? Because it has collected a lot of liquidity. There's equal loss liquidity there and inducement liquidity that they've collected. So they now have enough liquidity to push price up. They now have enough liquidity to push price up. If If they move successfully from that level, it means our sell, where we'll be anticipating our sell 78.6, it will be confluencing with almost everything there that we'll be anticipating. So that will be a very, very beautiful expectation, a very, very beautiful trade expectation that we are currently having now. So right now, all we now need, we're at a demand. We're at a very, very, this is a strong demand. But do you just jump in because we're at a demand? No. A huge no. So what do? You now wait for entry confirmations. Once you now have entry confirmations, that's when you jump into the trade. So now let me remove this Fibonacci. This is a very beautiful trade that if ever you really, let me refine. So once you got the 4 hour, you see that this is the demand here. That's the demand according to the 4 hour, where the market is currently right now. That's why I'm focusing. That's why I'm starting to analyze B5, because it's on a zone which can actually give us a very, very powerful, that can actually make us good money for the rest of today, tomorrow, even for the next coming following days, even of next week. So it's a trade opportunity that is currently. So this is a previous internal lower high, according to. So here, where was the previous one was this one. Here they failed to come to break, right? Then now the previous one is this one, because that's the high that broke this low. So that's our previous internal higher low. Internal lower high, I mean. That's our internal lower high according to the 4 hour time frame. Right. So now, meaning now, once they fully succeed to change character here, that's a confirmation that we are now going up. That's the major confirmation that we now need. The major confirmation that we now need is just a change of character there. Once they change character there, they are now, it's a confirmation to say we are now going up indeed. That pullback that we are anticipating, it means it would have begun, right? So when it's still like this, they can still play around, taking people out. But once you see this happening, all you now need is a pullback into an untapped demand, untapped order block, untapped favorable gap down there. Then you enter and you ride your trade all the way to the top. You're anticipating this supply here. This is the supply according to the 4 hour. That's the supply zone there. So that's a swing trade basically that I'm anticipating now on Boom 500. So on lower time frames, you'll discover that on lower time frames, once you go to 15-30 minutes, they can actually change that inside character early, right? So those ones can give you the early entries that you can actually, so those early entries will help you to come and break here. Once they come and break here with those early entries that you could have entered there, then the next thing that must follow is either a pullback, either from this supply there, they can actually start to pull back from there. The worst case scenario is for them to keep on booming to this one. So between this supply and this one, that's where we will anticipate them to pull back before they continue up. So now it means our early entries now, we're going to get them based on lower time frame confirmation. Lower time frame confirmation, I'm referring to a 15-minute, 30-minute. Once your 15-minute and 30-minute succeeds to change their character, that trade can hold as far as this. Once they break there now, we now know that indeed now on a higher time frame, they've actually now also confirmed that indeed we are going up. So now the most important details are the details that we're going to get on 30 minutes. All the analysis on the higher time frame we've done there. We now have all the details that we need according to the higher time frame. So that's a level that they must come to break here. Ultimately, they must break there. So for us to enter the initial entries down here, we just need the same thing on this lower time frames. The same thing I'm referring to. The lower time frames, we must shift order flow from bearish to bullish. Bearish to bullish, I'm simply referring to something like this. Something like this. Here we're coming down, lower highs, lower lows, lower low, lower high, lower low, lower high, lower low, lower high here. So the previous lower high according to the 30 minute, where is our previous lower high? Our previous lower high according to 30 minutes is this one. This one. This is our previous internal lower high according to 30 minutes. So that one is the one that must be broken on the 30 minutes for us to enter our initial buys. Those initial buys can only, if they fail to come and break there, it means they are still continuing to sell. If once we get this confirmation, we enter our buys. Once they come and fail to break here, they can actually continue selling. But now, once we succeed to do this and they break there now, we'll look forward for a reversal from those supplies that I drew up there. They can reverse before the continuation. So meaning us would have made money with the buys. with the buys going up there. So right now, our opportunity right now is we're just waiting for lower time frame 30-minute confirmation there. Once we get our confirmation there, this is our previous lower high. So someone can come and draw trend lines. What? Remember what I've always been telling you about trend lines. Trend lines, they are useless if ever they don't break structure. For example, someone can jump in because they've just seen a trend line breakout, right? A trend line breakout alone is not good enough, because if this trend line, if they come to this internal lower high and fail to break here, they can actually still continue to take people out. You see now, that will be the danger of just jumping in just because you saw a trend line breakout. It's not good enough. It's not a good enough it's not a good enough confluence for you to just jump into a position. So those are the details that you now want to see. Let me go to 1 hour. Let me just confirm something on the 1 hour. Let me see if the 1 hour has let's see if ever there's a level on the 1 hour that is within this major level that they can come and tap. Let's see if ever there's any internal 1 hour level, 1 hour level. If you look inside here, there's a 1 hour demand that is there, right? So this is something that, those are details that can actually help you now, to help you not to just jump in before so long that internal order flow hasn't shifted, they can still drop down up until they tap. Here they came, they didn't tap. You see, they came here, they didn't tap. So they can even still push down and tap into that zone. They can still push down and tap into this 1 hour zone that you're seeing, which is this 1 hour demand here. This 1 hour demand that is within our zone here. They can actually still push price up until they tap it like fully. So them not tapping it, it's actually, those are intentional moves. They it's not like they forgot or what. People, they think maybe the market would have forgotten. They don't forget, these guys. They don't forget. They actually do certain moves intentional. So them doing this, coming and not touching, they are doing what we call an inducement. An inducement is whereby they trigger early buyers. Once they trigger early buyers in the trade, once they trigger early buyers to jump into the trade, what they will do is they'll come back. They'll come back. You see them. They'll come back. They might come and fail to break. They come back. Once they come back, they'll tap now. Once they tap here, they know most of the early buyers, their stop losses, either they are now on break even or what. Then they come, they tap there, then they fly. So that one will simply be an inducement in that case. So now, the best right now, the confirmation that we now need, once they change this character, once they change this character, know that boom 500, we are now shooting upwards. And you don't just jump in because of that. You wait for a pullback. You wait for a pullback into an untapped zone, an untapped region. So basically, once the confirmations are all clear, they can come and tap here. They can come and tap that region, meaning you can buy there. You can buy there. Your first short-term target will be this. Once they succeed to change character there, which is a 4-hour change of character, right? Which I showed you that they can actually push this move all the way up there. They can push this move all the way up there. Once they succeed to break there, they can push further there before they pull back down, right? So this can be your first major target. Second major target can be that one. So those are the current targets that we'll be looking forward to. Once those targets are reached, we'll simply, remember, I will simply be giving you the instructions there in the free Telegram group and the free WhatsApp group there, showing you what we'll be doing as the market will be going. So right now we're just waiting. We're just waiting to strike now. We're just waiting to strike. That's the entry level that I'm looking forward to according to the 1 hour time frame, right? So those 1 hour time frame zones, the market cannot just go without tapping those zones. It can, most of the times, they can even forget about those, all the other zones that you find, 5 minute, 1 minute blocks that you find. Those are just small zones that the market can even go without tapping. But these ones, 1 hour zones, 4-hour zones, those ones, they don't just go untapped. So it will be so wise for you to wait, patiently wait. I know most people right now, they will be shaking, wanting to jump into the trade. So on 30 minutes, you see that on 30 minutes, this is the demand, which is also confluencing with almost the 1 hour demand, which is also a good thing. So it's almost the same entry zone that will be that we marked on the 1 hour, time frame, right? So that's the zone there. So they came, they didn't tap. So right now you're just folding your hands. This is the internal lower high. This one is not a lower high. This one is not a lower high. Someone can come and say they broke there. If you want to see that's not a lower high, you see once they come here, they'll come and even break this. So here, someone is going to jump in there because of lack of knowledge and lack of understanding, because they think this is a lower high. This is not a lower high. The previous lower high is this one. If you follow this leg, that's the previous lower high. So for them to make another, if they want to make this a lower high, if they want to make these levels a lower high, they have to come and take this out. Once they take this low out, it means our lower high will now be this one, right? So there are two kinds of entries that you can actually enter in this case. The first one is what we call the what do you call this? The risky entries. The risky entries are the entries that, for example, let's say in this case, let's say they come down and touch our zone here before changing character there. Here you can take a risky entry. Once they give you a bullish confirmation there, once they reject on the zone there, you can actually buy there, right? So the worst case scenario is whereby they can even come and test the law of the whole zone. The law of the low zone is this one. That's a worst case scenario. So that's why you always need to wait for those rejections. Once you get the rejection, that's a worst case scenario there. Once they come and give you a rejection there, that's a worst case scenario, which is also a good scenario, because once you get a rejection like it is one like that, that's where you can even enter a sniper entry that will be having even a smaller stop loss. Those are opportunities where you can even increase your risk and go a little bit hard for those that like going aggressive. You only do it on sniper zones like that. And only so here, that's my first zone right now of expectation. This one is a worst case scenario. Worst case scenario is that one. So there, once you enter there, you can put your stop loss below here. Remember, BOM 500 is not that volatile. It's not even that volatile. It's not even that volatile. So you putting your stop loss below there, it's not even a huge stop loss. Even when you are trading a small account, even if you are trading a small account, that will not even be a. So right now, this is my anticipation of this entry. So the most important thing, remember, as I said, is this one, for them to change this character. If they don't change this character, and they now come down, take out this low, right? It means once we get our rejection here, we can get our initial entries, which will be the risky entries. But once we get this, it means this now will now be our lower high. Once we now have this change of character, that's now a confirmation to say, once we get any form of pullback after that one, we are now going up. The market is now going up to this range. Once we break there, we're now going higher to those supply zones that I showed you. So currently, this is our level that we want to be broken. This is also another zone where we're anticipating once we get our rejection. So the worst case scenario is for them to not shift internal order flow. That's the worst case scenario. If you notice here, as they were coming, they never shifted internal order flow. Even I think I gave a risky entry around 3 a.m., which was here on this low, right? There, if you notice there, they didn't reject there, right? So that's why it was called a risky entry. They didn't reject, number one. Number two, they never shifted internal order flow. But anyways, it wasn't really a big deal because the stop loss was also small. So right now, the most important thing, the shift in internal order flow. That's the most important thing. The shift of what? Of internal order flow. The shift of internal order flow. That's the most important thing. If they don't shift internal order flow, BOM 500 can still continue going down. If they don't shift internal order flow. So the most important point of this entire analysis is for them to shift internal order flow. Once they shift here, that will now just be riding, going all the way up. So all those that like entering and maybe saying, guys, it's now on our zone, what the confirmation that you can give to the, let's say, once the group is opened, if ever you want to inform others whether the opportunity is now ripe, the best thing that you wait for internal order flow, wait for them to break here. Once you see them breaking there, that's when you can say, guys, the order flow is shifted according to what we're analyzing. The internal order flow is shifted. Once the internal order flow is shifted, you don't just jump in. There are specific entry zones that you wait for, because they know many people, after they see that shift, they start buying. And as you are buying, you will be buying at a premium zone. And as far as the institutions are concerned, they will drop down into a discount before they even go. So here, they can still drop down to this, because this one is an adjustment. They can still come down here, tap here, tap this region, this whole region, where I place these 3 lines. They can come into that zone, give you a rejection. Once they give you a rejection, if you are trading a small account, once this market comes into this region, you can take minimum risk there. You can take your minimum risk there. Once you take your minimum risk, then once you now have the shift of internal order flow, that's when you can increase your risk. Before internal order flow shifts, don't apply a lot of risk. Before internal order flow shifts, don't even apply a lot of risk. So guys, this is one of the major opportunities that I'm currently awaiting. So guys, I hope we are all going to make money on this opportunity. I hope we are all going to make money on this opportunity. This video, I've recorded it. You'll find it on YouTube. If you want to repeat it, you can rewatch it, so that you don't miss the opportunity, so that you know there's ones where we're anticipating to buy, how far we're anticipating to buy. So you'll find the video straight on YouTube. Just after this, you'll find the video straight on YouTube. So guys, thank you. See the video on YouTube just now. Step index, we're in a trade already. Step index, we're in a trade already. So that one, I might do another video maybe after this one. But we're in a trade already. So we're in a trade. We're currently in buys already. We took buys here. Those that remember, if you remember, we took buys here. I gave the signal there. The stop loss was there. The stop loss wasn't hit. They came rejected there. Once they rejected, we're currently still in this trade. Then yesterday, around evening, I said shift your stop loss to entry. So those that took the entry from there, their stop loss right now is even here on entry. They are just riding. If you followed my instructions, you're still in this trade and you're still riding. It's profit right now. Step index is a trade that is currently running. Here they came back to this demand. I also added some trades there. So this is a trade that is just flowing. Maybe after they come and break here, maybe they can give a reversal. Maybe after they break there, they can give a reversal. But so far, it's a trade that is currently running. It's a trade that is currently running. We're currently having a running trade already. I will open the group so that you see that people, those that listen to instructions, they are still in. And they're in good profit all the way from here to where it is right now. That's a lot of money. Trust me, that's a lot of money. Even if you shifted the stop loss to break even, it was never taken out by this. We are still in. So step index, we're still in the trade and we are in money. So Boom 500, don't miss that one. Make sure you go and rewatch the video on YouTube. The video will be there just now. Make sure you rewatch it. See you guys in the group. See you guys in the groups there.